And there's a paradigm shift that has to take place. And I'm teaching him how to do it the only way I know how to teach it. Whereas you have to frame a 15-minute or a 60-minute draw on liquidity, where the market's likely to go. And then on a 1-minute or 5-minute chart, if you're bearish, there has to be some run above a 5-minute swing high, even while it's been going down. It has to go up above it and start trading lower again. And then once it does that, you can drop down into a 30-second chart and take a 30-second fair value gap. Because the damage has been done on the 5-minute chart. It could have been a stop run on a swing high in a 1-minute chart. See, that's what a high frequency trading algorithm is doing. So you don't fucking know that because these clowns out there talking about algorithms, these wannabe quants. You might talk about all kinds of shit and call things quant. You may say your shit's algorithmic, but it's retail. But every fucking high frequency trading algorithm, every single one of them has to have a disruption in order flow before they will institute a new order. That means they cannot go short until it goes up. It has to go up. Why do you think I taught you discount premium? Because I am algorithmic. Enigma is fucking talking to you. It's not a yin and yang fucking symbol on some bullshit. The market has to go up, purge some measure of liquidity. If the market does, I don't give a fuck what market it is. But if you're bearish and on a 5-minute or 1-minute chart, if a swing high, a short-term swing high on that 5 or 1-minute chart is taken out by 1 tick and it trades lower, as soon as it trades lower, on what time frame are you talking about? Whatever time frame that liquidity was taken on. If you see the swing high on the 5-minute chart has been pierced by 1 tick is all it takes. It doesn't need to fucking close above it. It doesn't need to have a certain measure of handles above it. 1 tick. Once it does that, that's a disruption. That's a disruption in order flow. That's it. That starts the sell program. Then on a lower time frame, it can be a 5-second chart. It could be a 1-second chart. Okay, it doesn't matter. But I gave him a 30-second chart because it's easy to get in there and take a fair value gap after that disruption in order flow, knowing that the market will gravitate towards that liquidity. We need not see it trade to it. Now, some of you that are familiar with watching lower time frames and have been with me for a while, your fucking gears are turning right now. You're like, holy shit. I can see this, and I'm not even looking at the fucking chart. I can understand exactly what he's saying right now. These juices are flowing on. Yes, 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 yes. It's there every day, every hour, every 15 fucking minutes. It's there. So forget the 90-second or 90-minute fucking bullshit. It's every 15 minutes. It's there. I literally could sit there all day long, trade just intraday volatility, just doing what I just told you, and mop the fucking floor with all these fucking people out there talking shit, selling shit, robots and stuff. It's dumb. It's dumb. You don't need all that stuff. As soon as you take the very first fair value gap on the 30-second chart after that 1-minute or 5-minute disruption in order flow, that stop run and that time frame starts to trade lower, the very next candle when it starts to trade down, okay, you drop down to the 30-second chart and you wait for that little 30-second retracement because it's going to happen. And you look and see where your 10 handles would be. Place your limit order, put your stop loss in. He risks 12 handles. He's willing to take 12 handles as a hit to take 10 out. What the fuck did he just say? He just said he's using a negative R. Yes, because your reward to risk model bullshit is a myth. It's a fucking myth. You don't even trade with it. You want to talk about and sell your courses, and these people write these fucking books, but they're not trading with these fucking things in mind. Every person that's ever come out there and said that shit, give it enough time, they eventually come clean and say, well, you know, it's theoretical that if you did this, you can get 20 to 1. It's theoretical you can get 200 to 1, but they haven't really done it themselves. But hey, theory sells, right? You don't need to have a fucking 3 to 1, a 2 to 1, or a 1 to 1. If you have a high strike rate, what's a high strike rate? What I just told you? How many times do I tell you something before it happens and it happens? It's real logic. Nobody gets lucky like this, folks. That doesn't happen. Luck doesn't exist here. It's statistical probabilities rooted in real algorithmic price delivery, not retail logic trying to decipher something that has absolutely no basis on harmonic animal patterns. Elliott wave horse shit, supply and demand horse shit. It has nothing to do with it. It has nothing to do with it. This stuff is predetermined. It's running on a script, period. That's all it's doing. It's time-based. And you're complicating it, worrying about dumb shit. Oh, it's dropped down. I can't sell short down here. It's been going down. Why the fuck not? It's going somewhere. It's going down to Southtown, okay? Below the old low, below the relative equal lows. It's got something down there it wants to visit. It's warmer in the south. It wants to get down there. It needs some sun. I can't do it. I just can't do it, man. It's already gone down 100 fucking handles. I can't imagine it going down 35, 55 more where it should fucking go where the liquidity's resting below the lows. Why would it want to do that? Yeah, I can see why everybody would think that way, because that's what all the bullshit artists talk about. The books, the people that don't fucking trade, they sell you all that stuff, like timeshares. Makes it sound like it's a wonderful thing till you get in and you wish you could get out of it and you can't. That just hurts somebody's feelings. Fuck. He just knew I wasted money on a timeshare.